We've been out talking to clients recently about the question, are we in a bubble economy? I think money moves around so fast these days that it's easy for it to move into pockets and create this bubble effect. If you look back over the last 20 years, we had the internet bubble of 99 to 2001. Then came the real estate bubble of 2007, 2008, 2009. We're of the general opinion that we are working towards a bubble. We look at these real esoteric signs of these, it's what we call bubble indicators. For example, Da Vinci just sold for $500 million, which, the art market actually tends to correlate with a market that's topping out. And sometimes when you see these just outrageous prices for art, it tends to be a little signal. Some of the more tangible statistical things, price earnings are getting a little bit high. We're pushing up on the US market. We're pushing up into a price earnings ratio in the high 19s. The highest we've ever had is in that 22, 23 range, which happened during the dot-com bubble. This Bitcoin phenomenon, we look at that as a bubble sign. This was a currency that was created out of nowhere. It has no real good faith backing from any government. That shot up over 1,000% this year. I think the total Bitcoin market is in the cyber currency, the cryptocurrency market's in the 500 billion range. Bitcoin's around 300 billion. So when you have money flowing into something like that, it's kind of capital flow created overnight. That gives you a little signal that there's some excesses. Another funny one that our investment team uncovered recently was the Argentinian government floated a 100-year bond, which was oversubscribed, meaning there were more people that wanted to buy the bond. This is a 100-year Argentinian bond, and Argentina has defaulted 5 times over the last 150 years. So we find it very ironic that someone would be willing to buy something like that when it's already defaulted 5 times. Overall, we think this bubble is somewhere out in the future, 2, 3, 4 years. So we're going to monitor it closely. We still think the economy's strong. We still think valuations are not too high. So we're bullish for this year, but we are going to keep this bubble watch on and keep a close eye on it.